Today we look at the IPO of HI Mobility. This is a bus company backed by Yinsen. So let's get right into the details. So the IPO share price will be 1 ringgit 22 cents per share, 500 million number of shares. So market cap is 610 million. Financial year profit after tax 33 million, which gives a valuation of around 18 times. In as far as next year's forward PE, that's what we are going to explore.
Later, yeah.
So just a reminder, if you want to grab onto the shares, the closing is on March 9, which I think as of by the time you release is tomorrow.
Yes, correct. Yeah.
Okay.
So you got until like 5 p.m. to sub.
There you go. So reminder, you can actually grab this IPO through Moomoo. And of course, if you don't have a Moomoo account, you can sign up using our code. Well, first of all, the link is in the comments and description. And then if you put in this code FIRL24, what do we get?
Yes, so you get an additional 40 ringgit cash voucher on top of all of these rewards for the new signups. So the more you deposit, then you can see the more cash rewards that you can get. Even you can get like free one additional shares. It could be like Tesla, Apple. This round is like Apple. Previously it was Nvidia. So there's a lot of attractive rewards if you're a first-time user of Moomoo. So make sure to check it out. The links will be in the description and comments.
Okay, so the business is, they're basically involved in scheduled bus services, heavily in the Johor region, but not exclusive.
Yes.
So this would be all the way from Klang to Johor. Obviously, the Johor one is the exciting one. They also pass by Malacca as well. So the kind of people that use their buses, of course, I think it's everybody pretty much, right?
Yes, correct.
Public, government, and corporation.
Yeah, exactly. So very simple business only. It's just like bus transporting people here and there. So quick facts, they have about 683 buses. So about 53 are EVs. And the average age for all of these buses is around 7 years. They provide like at least 3 scheduled bus services. So number 1 is cross-border, number 2 is intra-city. Intra-city meaning it is basically inside of, let's say you are traveling around Malacca, right? So it's inside like Malacca.
Yeah, let's say like Batu Berendam to Aikaro or something
yes,
like
correct.
that.
So intercity is more of like a longer distance, like a state travel.
Perak to Selangor.
Exactly. So cross-border is basically Singapore to JB or KL to JB, that kind of thing. So they also do chartered buses. Basically, they just rent out whatever buses that is unutilized to other people to operate. Then they also got to show like how many buses are basically under this segment and how many routes they are servicing. And one fun fact is that they don't have a touch and go e-wallet payment for their buses. So they have this special thing called the Manja Link Pay Card or something like that. It's basically their own like a payment gateway. They also have their own app called the Lugo. They also can actually see like when does the bus arrive, what is the route like, what's the timetable. You also can make some payments with some of their payment gateways that they own self make. So I'm not sure whether they will use touch and go soon or not, but maybe in the future. But they also accept credit card and so debit cards for these fares.
Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description.
So there's 2 types of revenue model. Number 1, which is a net cost model. So net cost model is very simple. You just collect the money, and then whatever operating cost that you incurred is basically like your bus maintenance or those kind of your people, the drivers, right? So you have to pay everything. And then how they make money is basically based on per head. Yeah, so whenever there's passenger come in, and then they just scan, and then they pay. That's how they make money. Very simple only. The second model, so net cost model is more quite capital intensive in the sense that because you have to maintain your bus. Everything is on the it's basically everything you have to manage. The second revenue model is more profitable in a sense where it's called the gross cost model. So basically this one is linked with the government and is paid by per month. And then how they charge is basically they charge based on per kilometer or the mileage that you travel. So this one, it is whatever money that they receive from the passengers, or maybe the government will give them like some sort of monthly income every single month, because they have to like report every single month that hey, we travel this amount of km, how many people are here and whatsoever. So it's a much more, I would say, it doesn't really incur of the operating costs for this model, unlike the net cost model. This one is basically just the government and you're helping the government do the service
Yeah.
That's about it.
So the government pays you basically a
correct.
retainer.
Yeah, and then however you have to give like some sort of performance bonds. So some sort of like security that you would follow whatever the contract or the agreement that you have done with the government. Yeah,
That's
it's very
straightforward.
simple.
Yeah.
Okay, so there's also a penalty. So let's say if they didn't perform as per the contract, so these are with the government. If let's say there's an underperformance, basically there will be penalties that they will be deducted from the whatever revenue that they managed to make from the government's contract. So it's very simple as that only. But yeah, so you need to know that there's this penalty. Prices also is very affordable only. You can see that this is their website. What is the fare ticket is around like 2 ringgit, 3 ringgit, 4 ringgit. And if you're going to go cross border, there's also the price is around like 7 ringgit each.
Into Singapore.
Yeah, from JB to Singapore. Yeah.
Wow.
Yeah, so it's about there. Then you can see that the cross-border ridership also increased a lot. Basically, 2022 number is very low is because that was the time where the COVID happened. So there's a travel restriction. Then obviously now it's going back to normal. Now you notice also there's a slight increase over here in 2022 where the fare or the ticket is around like 57 ringgit per head. So the reason why it's so high is because they did this vaccinated travel lane or something like that. So it's like during COVID.
So the prices were a lot higher.
Yeah, correct.
Yeah,
not many travelers.
But I think would you say it's fair to say that the price per rider will drop, but of course the flip side is that the volume they're gonna get is gonna be a lot bigger. And then at one point they're gonna maybe it will stagnate the price per rider.
So this one also it depends on whether the government will come in and then will impose like some sort of price ceiling. This one it depends. The report didn't really mention about that, but obviously I think as for public services, the price either will maintain or probably it will drop lah. So most likely, like what you say, the only way that they can maintain it is actually get more ridership for the bus. That's about it. Okay, so revenue and gross profit margin by segment. You can see that the one that is contributing the most revenue is their scheduled buses. And under the scheduled buses right now, the one that is actually giving out more revenue, it is the cross-border. So it's basically your JB to Singapore or your KL to Singapore. And then you also can see the difference in margin. You can see that cross-border one, they have a higher margin as compared to intra-city, intercity, and also chartered bus services. So this is a given because quite a far distance. Intra-city, the more you travel, right, obviously you have to maintain more, like inside intercity and intra-city. And then
it's more frequent, so wear and tear is higher.
Yes, exactly, yeah. As opposed to the gross border. That's why you can see that gross border's margin is very, very high. Then you can see also this side is negative is because during COVID times, obviously they didn't really make a lot of money lah. Okay, revenue by customer, majority it is still coming from the general public. Then the second one it is the government bodies, which is the recurring income. The government gave them the contract to fetch whoever the government bodies around. So you can see that this is their major customer. They are working with PAJ. And also they are working with APAD. They also got see like some interesting names like Seagate, Petronas Refinery, and also Sepang. All of these guys also they are kind of like servicing lah. Geography also is everything is just in Malaysia. So it's basically now it's like 50-50 Malaysia and Singapore because they do cross border. So yeah. Okay, so costs. The two main costs is actually just the direct labor, which is the driver, and the second one, and also your technician. And then the second one, which is the fuel or spare part. Majority is actually just fuel because they're using like diesel, right? But that's why they have to like spend more on that. And you can see that this is the cost per labor. So what's interesting is that in Singapore, they put like some sort of like I'll say like when they want to recruit drivers at around like 5 to 6K SGD per month. So yeah, you can earn like quite a lot for Singapore. And this is also aligned with this number, which is in 2024, where the riders can earn up to like around 50K per month.
Okay.
So yeah, quite a lucrative job if you want to apply. Okay, CAPEX, average CAPEX per bus 600,000. So they have two different buses. One is the ICE vehicle, the other one is EV. ICE, they cost around like 400 to 600,000, whereas for EV, this one's more expensive. It's about 700 to 1.2 million. So, but the good side is that EV's operating costs will be definitely much lesser than the ICE. they didn't really specify how much is it, but you can base on like if when you're driving like a Tesla and versus when you're driving like a Tesla equivalent ICE vehicle, you will notice like the maintenance cost and whatsoever operating costs will be much lesser lah than the ICE. The second one, which is the working capital, is 25.5% of growth capex. This one is basically my own assumption only. I use the number based on their IPO proceeds. For the working capital divided by whatever growth capex that they plan to spend on the bus. Basically their bus expansion. So yeah, I calculated roughly they're going to be using about 25.5% of growth capex. So this one could be some sort of like interesting stats for your analysis. Okay, industry. So one thing is that this is a very slow growth. I mean Malaysia, it is kind of still like a car-driven economy. Yeah, they don't really like ride a lot of the bus. That's why HI Mobility is also working very hard to promote and market. The government also actually is trying to encourage more people to take public transport, your LRT and also the bus. But obviously you can see from the graph over here, the mean monthly household expenditure for scheduled bus, which is the shaded graph over here, it's not really growing a lot lah. I mean, you can see the CAGR for 2019 to 2022 is only 3.4%. Yeah, it's still like a very, very slow moving kind of like trend for bus riders. But the good thing, it is that there is a stagnant supply for vehicle permit for bus. So which means there's not a lot of competition coming in already.
Yep.
Yeah. And also HI Mobility is the largest bus operator in the private segment in Malaysia. So yeah, basically they get the most of the pie lah. Okay, so the peers over here, they are basically competing with a lot of Sendia Berhads. There's no listed company other than Combined Bus. Combined Bus is under Perak Transit subsidiary. But this one, they handle more things like your petrol, and then also they also do like bus terminal and all those kind of things. But yeah, you can see generally they are doing pretty well. Net margin, gross margin is pretty on the high side. Yeah, as compared to other Sendia Berhads. The reason why is because they have a larger fleet. So the more fleet you have, obviously you can achieve economies of scale, then your profits will be improving. Okay, the team.
Okay.
This one will be Lim Han Wing. I think whoever
founder
so
of
this,
Yinsen,
yeah, you know that he's a Yinsen guy. So last time he used to be a car salesman. He also used to be a lorry cargo space salesperson, and then he became a manager. Then after that, he kind of like incorporated Yinsen Transport in 1984. Then he did Handal Indah, which is today's HI Mobility lah, his bus transportation. So yeah, he is basically linked to Yinsen. He is actually the founder of Yinsen lah. Yeah, so that is Lim Han Wing. He's 73 years old. Then this is his wife. Previously, she also owned her own business. It is in the hairdressing and makeup salon. And then after that, she joined her husband on this whatever business venture that he did. Now, finally, the key guy, which is over here, Lim Chen Chuan. So this one is the son. He is the CEO. Last time he works for like some sort of software design. That's why he's also the one that spearheaded Manja Link Card, Manja Pay, which is all related to software one, digital infrastructure. He's the one that helped to build these kind of things for HI Mobility. So that's pretty good. And on top of that, he also is the one that is securing the contracts from the government. So whatever deals, he is basically like a deal maker with the government.
Crucial.
Yes. Okay, one interesting thing or good thing about HI Mobility is that this is a very young team. Basically, you can see the CEO, CMO, every single senior management, they are very, very young.
All under 50 except Mr.
Zamri. Yeah, exactly. So yeah, it's still very, very vibrant and it looks pretty decent. There's some sort of offer for sales also from this Lim Han Wen. So he's basically going to sell some of his stake and he's going to be making a profit about 34 million post-IPO. And you can see that their remuneration also, they're being paid about 7% of profit before tax for 2025. This is just a rough estimation from the research that I did from The Edge, because they also did interview HI Mobility. Then they kind of like give a figure. Then basically I just add whatever tax rate that they are most likely going to be getting. And then, yeah, this is how I got the figure lah. But in total, they're going to be getting paid about like a 3.
So 7% is quite a bit higher than the industry average, right? I think industry average is like 3-4%.
So there's no insight on industry average because the bus, this is like the only listed bus company over here.
Yeah,
so it's pretty hard.
Yeah, and of course we can't exactly compare the Singaporean ones as well, because Singaporean is mixed.
Government, yeah,
it's government and it's mixed with other things like SBS Transit. I believe is there's other.
Yes, exactly. Then there's also SMRT and all those time.
Yep. Okay, numbers.
Numbers. So
Very profitable.
yeah, very profitable, growing also. Margins, most likely is going to be hovering around like 30% already lah. I don't think they can grow much. Because they are going to be competing with a lot of like those small little players, and also on top of that, you have RTS coming soon. So yeah, basically there's a lot of like choices, and new public transportation will be coming in online. So margins will most likely going to be around here. But if they improve gross margin, I will be quite surprised. I mean, because usually travelers will complain if, let's say, you increase prices for your ticket. Yeah, cannot even increase 10 cents. If you increase 10 cents, they will definitely like scold you lah. Okay, this side is a net debt company. They have a lot of short-term debts. Now, another interesting thing when I was actually researching is that they use short-term debt to finance their bus. Yeah. So short-term debt is usually like less than 1 year, and vehicle,
Yeah, but the bus is many years, yeah.
Yeah, many years. So the depreciation is like 15 years for like bus on average. So yeah, this is quite interesting that they use short-term debt to buy, but in 2024, or at least
The
in
transitioning
FE, yeah, they
into-
transition. So they
But
actually
it
get more
is
long-term debt.
reminder of like their blood, you know, like Yinsen's blood, where they actually use, you know, other people's money. So this is bank, you know, and things like that. So to grow the company. So, but yeah, it is a question I would ask, you know, why was there short-term debt? Why did they use
correct. But the thing is that after that they transition the short-term debt to long-term. So yeah, I think that.
Or rather, it's a transitioning, because it's still pretty high, right? It's 65 million.
Yep. Okay, cash flow. This one is a pretty good business. Obviously, yeah, just collecting tickets from passengers, and let's say the more people ride bus, the more revenue they get. Then there's a dividend payout also, only for one time in 2024, but this dividend is getting paid out from the short-term debt. So this is also another question mark. Why did they like use a short-term debt to pay dividends? Yeah, this one, Okay, returns, ROIC, ROE, this one also is looking to be improving. Why is it negative? Is because I use free cash flow instead of net profit. But you can see that right now they are in a positive. So far, they are doing good. Okay, growth and risk. Their IPO proceeds, they're going to be adding more ICE and EV buses. So I did a rough calculation. They only just give a number, like how much money they're going to spend for each. So I roughly calculated it's going to be about 70 to 105 for ICE buses, and then 40 to 65 EV buses. So for EV buses, it's going to be like a 2x increase in amount. For ICE buses, it's going to be like a roughly 15%, 12 to 50% increase. Second one, it is the EV upfront cost is higher. Just like I mentioned, they are going to be spending about 700,000 to 1.2 million per EV bus. But then the operating cost is lower compared to ICE, because they don't really need a lot to maintain. It's just the battery, and then probably the body parts only. That's about it. The third one is unbilled order book. So they have about 174.6 million. So in 2026, they're going to recognize about 70 million. In 2027, they're going to recognize about 30 to 40 million ish. Yeah. And then the last but not least, obviously, is the Johor Singapore Special Economic Zone. When there's more population going to be working in Johor and also in Singapore, definitely it will attract more people to travel around. So the traffic might be increasing. Hence, most likely, HI Mobility's business will be improving as well. Okay, risk is that they are reliant on APAD and other government bodies. So this one contributes roughly about 30 to 40% of their revenue. And this one is based on agreement basis. So that's why if, let's say, they lose this government body, they will be losing this recurring income. So this is what is giving them like a safe, stable income for their business. Second one, which is RTS link versus bus. So far, I think the RTS fare might be more expensive than the bus.
Yes, for sure.
Because the operating and CAPEX, everything is like much more higher than
RTS. Well, the prediction now is that RTS will be a white collar.
White collar, yeah.
More for white collars.
Yeah. However,
but 90% of people who cross the causeway are blue collars.
Yep. So the good thing it is that with RTS, it might smoothen the traffic
for the bus.
highway. Yeah, for the bus. So that's the only benefit. But it's still going to be a risk, because there will be choices whether they will prefer more bus or RTS. The third one, obviously, is ticket fare.
Price controls.
Price controls, and whether they can. it's very hard already because the people will kind of like complain, right? So most likely you maintain or most likely it will go down lah. So the only thing that they can do is basically either get more contracts from the government or probably they have to like somehow maintain the prices over the years and increase volume also. Okay, so final thoughts is that obviously they use short-term debt to pay dividends. So this is basically whatever they say over here is inside their prospectus. And also they use short-term debt to finance their buses in the past. Basically, it's just 1 year or less than 1 year tenure only. Right now, obviously, they're using long-term debt. So this one also is like questionable why they are doing that. Second one, what's interesting is that they don't use any proceeds to settle their debts. So yeah, they are basically going to be raising money just to expand their bus and also some of the charging infrastructure, tech, working capital, and also IPO listing. Yeah, so these are also very interesting to see that. Third one, so in 2025, this is by the age, they have an interview over there. That's how I got the number of, the PE, which is 13.6 times, and also why I can get like the 7% remuneration to PBT. Basically, I just reverse calculate lah. But yeah, so this means that they will be making roughly around like 45 million profit for 2025.
If all this come true. Yeah.
Yes, correct. Which is a 30+% increase from FY 2024.
So we go from 18 times earnings 2024 to
13.
about 14.
Yeah, correct. About 14 times,
Yeah.
exactly. So doesn't look so expensive. So the last one, which is quite a unique case, which is the Johor to Singapore Special Economic Zone and also RTS. I think this company is quite well positioned for this kind of like growth. And also, besides just property and construction, right now we have like a new thing, which is the bus.
Yep.
So yeah, this one will be like an additional stock that you can maybe monitor for the progress of these unique catalysts, which is related to Johor and Singapore. So yeah, that's why I found it quite interesting for HI Mobility, and hence we are going to be covering this in this video. Okay, so if you are interested after watching, you can make sure to subscribe before 5 p.m. 19th of March and use our referral link under the description and comments, and also use our code FIRE24 to get an additional 40 ringgit voucher on top of all of these rewards that you will be getting as a new sign up. Okay, so this is just a quick step-by-step on how you can do that. Basically, once you open your Moomoo app, you can just go to your account and you also want to obviously open your CDS account with Moomoo. Once you're open already, basically you want to go to markets, go to Malaysia, then you see there is a IPO segment, and then you'll find HI Mobility. Just scroll, then you'll find it already. Then you just subscribe, then you just put whatever amount that you plan to subscribe for this IPO. So yeah, that will be it. And this is the February 2025's update.
March will be lower.
Yes, March will be definitely lower.
So a lot of the companies might be an opportunity for you to look at. FirePro, for those of you who don't know, FirePro is designed to shortcut your research journey. Everybody's a bit busy, kids, day jobs, whatever. But you still want to invest, right? So that's where FirePro comes in. Inside FirePro, you get, of course, our reference portfolios. This FPM, FPG, and TB, Malaysia, Global, and Boring. So Boring would be more dividend based. That's done pretty well over the past year or so. And we are also, we do write-ups inside the company so that you can read the details, what you need to know about these companies, and hopefully improve your investment journey. And if you want to check it out, links in the comments and description, 10% off. And if you want to get a taste, we have the free sample as well, also in the comment section and description. All right, I will see you in the next video. Bye-bye.